everybody, Happy New Year from Mike Tizzano here with Fairway Independent Mortgage and the TizzanoTeam. 2018, this is my first video of the year. My NMLS ID is 1015837. Got to get all that out of the way. I wanted to bring you a video for the start of the year regarding a subject you probably hear a lot about when you're thinking about purchasing a home, or you're going to hear a lot about, and that is interest rates. Now, there's two ways to consider interest rates. One way is, what are the market rates, which are affected by a number of things in the economy, such as economic growth and the Federal Reserve and things like that. And there's so many, too many to list. But there's also your personal interest rate and how you can ensure that you're getting the best interest rate available when it comes time for you to buy or refinance a house. So there's a number of factors that go into your personal interest rate and what's available to you, and we refer to that as risk-based pricing. So basically everything, when we look at your overall profile when you apply for a loan, what we're looking at is how risky is it that we're giving you this money to purchase a house or to refinance your house. And so everything that increases your risks makes your risk profile, I should say, will make your interest rates slightly go up here and there and here and there. So the number one thing is your credit score. Obviously, your credit score shows your propensity to repay your bills and repay your debts. And if you have a very high credit score, you've shown a history of paying your bills on time. If you have a fair to low credit score, you've shown that in the past you've had trouble with that. So that makes you a riskier person, which means your interest, or a riskier borrower, which means your interest rate's probably going to be a little bit higher. And typically the credit score you should shoot for to get the best interest rates available on the market is 740. I've had people, do loan applications, they have 760 and they're thinking, well, what if I get to 800? Doesn't make a difference. If you're over 740, you're basically getting the best rates available. Okay, the second thing that really affects your interest rate is your down payment. So if you're coming into a house and you're only putting 3% down versus somebody that's putting 20% down, you're a higher risk than the person that's putting 20% down. So you're probably going to pay a little bit higher interest rate as well. The third thing is actually the property type. If you're purchasing a detached single-family house, that's considered a lower risk than a condominium or a manufactured house. And that's probably based on statistics from all the government entities that show that default rates are higher on specific types of accounts. The fourth thing is the loan program. So your interest rate is going to be affected by whether you're doing a conventional loan or a government loan or some sort of alternative documentation loan with private money. Typically, private money loans come with the highest interest rates. So for like self-employed people that use bank statements to verify income, they're going to pay a much higher rate than somebody who can qualify for just a conventional loan. And so those are the main four things that really go into your interest rate considerations. So your credit score, and there's a number of tiers. So a 680 is going to get a better score than a 640, and so on and so forth. Down payment or loan to value on a refinance. If you're below 50% loan to value, you're going to get a really good interest rate. The property type and the loan program. As always, if you have any questions, you can call me. You can direct message me on Facebook. You can text me. You can email me. I'll put all the information in the comment section of this post. I hope you all have a great rest of your week, and take care. Talk to you soon. Bye.